right at 25 basis points. So you called it right. Is it the right decision?
I do think it's the right decision. It is a challenging decision for most of us out there because now we have to fork out a lot more money, to pay for our bonds, for our cars, and so on and so on. But I think if you look at all the facts that the SARB always considers going ahead ahead of an interest rate decision, I think, issues like inflation going up and the risk of inflation continuing to go higher just because of a weakening currency, I think you would say that there was room for the governor to increase interest rates. And the last thing you want is a situation where he would have waited for Janet Yellen in the USA in December to increase interest rates, and then he was going to be lagging behind. That would have made sure that the rand weakens some more, and I think would have aggravated the situation even more.
Was this a preemptive move because of those widespread expectations that the US will go up?
No, look,
some were saying we did have to act even before the US.
No, I would like to believe that this was an independent decision, holistically considering South African issues and the fact that we have known for the past 3 odd months that the SARB and the government is expecting inflation to go above 6%, by probably middle of next year. So if that is the case, it means they are trying to do their best to make sure that they act before inflation breaches the 6% upper limits. And then obviously we're expecting that in 2017 it's going to come back below 6%. So I think that it was a wholly considered local decision-making process.
What would you say to Lesibo Motato, we spoke to yesterday, who said inflation may be a hit and run, it may come and go, and therefore maybe the banks should actually wait?
I think the governor has waited, honestly speaking. If you look at the points at which he has increased interest rates, there's only been about 3 or 4 times that has increased interest rates since he started the interest rate reversal cycle. There's been a lot of patience applied. But what we're failing to see is the rand firm up. And I think that's where we're saying we need to protect ourselves by making sure that at least if we increase interest rates, we make it attractive for some foreign capital to stay in the country. Because if America starts to increase interest rates, we're going to see a drain of capital out of South Africa into offshore markets. So it's a good thing that we've been preemptive, or rather we've made the decision ahead of the Fed, because if we hadn't done that, the rand would have weakened. And by the time the US started increasing interest rates, we'd have seen worse off. And I think right now you see today what happened, the currency did firm up. It's a local issue. Everyone is waiting for December for the Fed to decide. But I think the decision made today, as much as it's going to hurt some consumers, for the good of the country, it was timelessly applied.
For lay people, describe why this is so important for investors. Why a slight little increase here can make us more attractive. Why a slight little increase in America can make America more attractive and damage us quite badly, according to some predictions.
So basically, up to yesterday, for example, if you had walked into an African bank branch with 100,000 rands and you wanted to get money, you wanted to deposit that cash for about 6 months odd, the highest rate you were going to get was 7.59%. So now all of a sudden you're going to get 25 basis points or more because of the rate increase that we've had. There's now a consideration that they must pay you more for your money because interest rates have gone higher. But at the same time, the flip side is that for your bond, you now have to pay, if you didn't fix your bond, you now have to pay 25 basis points more for that. I mean, companies like Investec and African Bank, as I mentioned, they are paying 7.59% for their paper. Some guys are paying 5%. But the interesting thing is that once the interest rates get increased by the Reserve Bank, you're getting more for the money you have in the bank. So it's good for the people on retirement who've got their solutions that are biased towards money market funds.
I'm talking about those huge investors working with huge volumes. So this makes a big difference to their decision making.
Of course, but then the man in the street doesn't understand or care about that. I'm talking to those people that really, are affected by these interest rates on the ground. For the big banks, it means all of a sudden a 25 basis points move on the upside has affected your P&L. If you thought that there was not going to be an interest rate increase, you've had a bad day today. But if you had bet on the interest rates happening, then you have made some money today.
What about the South African economy? Some people saying we may only see growth of around 1% this year. It's not enough. We need jobs, we need growth, we need some stimulus in the economy, and this will have the opposite effect. Was it really the lesser evil of inflation?
I do think that, we've got very wise people that sit on the board at the SARB. They have looked at all these numbers, and the good thing is that they do look at the numbers and the circumstances that the country is currently facing. Yes, we need to create jobs, but the challenge is if we went out and say, let's just keep interest rates at the rates where they are, we're weakening our currency, we're making sure that we create inflation in the economy, and down the line, prices become uncontrollable. People actually are going to lose jobs through that process. And I think that it's a one-sided approach to look at the fact that there isn't jobs, let's keep interest rates lower. The Reserve Bank team does look at a holistic approach to this issue. Inflationary pressure and the fact that, the rest of the world has been in a low interest rate environment for a very long time. I do believe it was about time. It's about time that the Reserve Bank did a 25 basis points increase ahead of the US decision, as well as the fact that if you look at the timing of it, it's been a long time since we last had the last interest rate increase.
Let's end on this because we're talking about joblessness. If we think about it, this interest rate increase will affect people who can actually afford a house, afford to take out credit. But I guess the poor are the ones actually really harmed by inflation, by food inflation, things like this. Was this perhaps a pro-poor decision in that sense?
No, look, I think it was a fair decision, not just for the pro-poor, in my view, because you need to achieve currency stability. If you achieve currency stability by applying the monetary policy in the manner that the good governor has applied it today, you are actually probably, addressing both sides of the coin. People who have got cash and people who don't. You don't want the rand weakening aggressively. It affects business. It affects inflation on the food side. That affects the people at the bottom.
All right. So welcoming today's decision. Thank you so much, Owen Nkomo from Inkunzi Investments. Well, it was a day.